Hey, so when you hear people say you should start investing in the stock market, what's your first thought? For me, it's usually something like, the same stock market that crashed twice while I was growing up. Seriously though, if you're part of Gen Z or a millennial, you probably feel this mix of pressure and doubt about investing. On one hand, everyone's saying invest or you'll never get rich. On the other hand, you've seen some pretty scary crashes, heard stories of people losing everything, and maybe you're thinking, why should I trust this system? It feels rigged. Today, we're diving deep into why our generations, Millennials and Gen Z, are so skeptical about the stock market. We'll break down the history, the reasons, the emotions, and of course, what it means for our financial futures. So grab a drink and let's get into it. And hey, if you're watching this and thinking, I'm not even sure what the stock market really is, don't worry, this video is for you, because understanding the why behind our skepticism can actually help us figure out how to navigate it better. Spoiler, it's not about avoiding investing, it's about doing it on our own terms. Let's start with some history because context is everything. If you're a millennial, you probably remember the 2008 global financial crisis pretty vividly. For many of us, it was the first big economic event that hit hard. It wasn't just numbers on a screen. It meant parents losing jobs or homes, dreams of buying your first flat put on hold, university fees rising while graduate salaries stayed low, an entire generation facing what some call a lost decade financially. Now, Gen Z might not remember it firsthand, but you grew up in its aftermath. You watched your parents stressing about money, you saw news stories about recession and job cuts. And this wasn't just some random crash. It was caused by reckless behavior from our banks and investment firms, taking huge risks with other people's money. People at the top made millions, while everyday folk took the fall. So here's the kicker. The stock market is tied to that system, and you're being told, hey, trust it now, invest in it. Right, like that's gonna happen without some serious side-eye. Plus, the recovery mostly helped wealthy investors bounce back fast, while wages for many stayed flat. So the system that's supposed to grow your money felt out of reach for most, making investing seem like a game rigged from the start. The feeling that the stock market is rigged isn't just a conspiracy theory. There are real events that fuel this belief. Take the GameStop saga in early 2021. You remember that, right? A bunch of retail investors on Reddit tried to flip the script and squeeze hedge funds betting against GameStop. For a moment, it felt like the little guys actually had power. But then, apps like Robinhood froze buying on GameStop shares. Retail investors were locked out. Meanwhile, big institutions could still trade freely. What did that say? That the rules don't apply equally, that the market is tilted towards those who already have tons of money and influence. Or look at the flash crash of 2010, when a Dow plunged about 1,000 points in just minutes due to high-frequency trading glitches, only to bounce back most of the losses by the end of the day. Or the fact that in 2020, during the COVID crash, the government pumped trillions into the economy, mostly propping up big corporations and Wall Street. These moments make us question, is the stock market a fair place for someone who's just trying to save £100 a month? Add that to insider trading scandals and secretive trading dark pools. It's easy to see why many feel like the market is set up to benefit the rich and powerful, not everyday investors. Here's another piece of the puzzle: education. How many of us have learned anything useful about money in school? I'm guessing not much. We learned calculus, history, maybe a bit of economics, but practical personal finance? Rarely. No one handed us a manual that said, this is what a pension is, this is how compound interest works, this is what a dividend means. So what do we do when we want to learn? We go online. But the internet is a wild place filled with influencers hyping up the next big crypto, people telling you to buy risky penny stocks, get rich quick schemes that look more like scams. It's confusing. And if you're already stressed about money, it can feel safer just to avoid investing altogether. Financial advice online is often mixed and overwhelming, making it hard to know who or what to trust. Without clear guidance, it's no wonder many just freeze up instead of taking action. Alright, now let's talk about the brutal reality we face every day. Rent is crazy expensive. In the UK, the average monthly rent rose by about 10% in just 1 year. Groceries cost way more. Energy bills are through the roof. And wages, they haven't kept pace. In fact, real wages after inflation for millennials and Gen Z have basically stagnated. This isn't just a small inconvenience. This is a financial squeeze that makes investing seem like a luxury. If you're working 2 jobs just to pay rent and buy groceries, how are you supposed to put money in the stock market? And when you do try, it's scary to see your investments drop during a recession, which seems to happen more often than not. Beyond money, this constant financial pressure hits your mental health and confidence. When every penny counts just to survive, thinking long-term about investing can feel impossible. The gap between advice and reality fuels frustration and distrust. Here's the twist. Despite all the skepticism, Millennials and Gen Z are investing. According to surveys, nearly 60% of Gen Z adults in the US are investing in stocks and crypto. And in the UK, platforms like Free Trade, Trading212 and Nutmeg have seen huge increases in young users. But we're cautious. We want low fees, easy access, transparency, ethical investments, like companies with strong environmental or social policies. We're not chasing the hype. We want slow, steady growth. We're less likely to buy individual stocks blindly, more likely to invest in ETFs or index funds. We're also blending traditional investments with newer ones like crypto and startups, often driven by values, not just profits. It's a smarter, more cautious approach that could reshape investing for the better. Alright, so what do you do if you want to invest but you feel totally overwhelmed? Here's a simple starter plan. Number 1, learn the basics. Start with concepts like ETFs, index funds, diversification, and compound interest. Free resources like the Financial Times Beginner Guide or YouTube channels like This One are gold. 2, start small. Even £10 a month adds up over time. Think of it like planting a tree that grows slowly but surely. 3, use tax-efficient accounts. In the UK, a stocks and shares ISA means your gains won't be taxed, which helps your money grow faster. 4, ignore the noise. Don't jump on hot tips or try to time the market. Remember, long-term investing is a marathon, not a sprint. 5, automate your investments. Set up monthly contributions so you don't have to think about it. Remember, the best investors stay consistent and patient. Not perfect. Mistakes happen, but starting and sticking with it is what counts. So yeah, Millennials and Gen Z have good reasons to be skeptical about the stock market. We grew up watching financial crashes, navigating a tricky economy, and trying to figure out money on our own. But that doesn't mean we have to give up on investing. It just means we need to be smarter about it. Ask questions, take your time, build knowledge. So I want to hear from you. What's your experience with investing? Are you already putting money in stocks, crypto, or other assets? Or are you still figuring it out? What's your biggest fear about investing? Drop your thoughts in the comments. No judgment here. And if you got something useful from this, smash the like button. Subscribe for more honest money talks. And I'll catch you in the next one. Peace.